Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalysts move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book one of the Drill Sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, one score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book one free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday. Happy Wednesday, everyone. We're back from VRIC, the Vancouver Resource Investment Conference, as well as Roundup is still on. And of course, the Metals Investor Forum. Quick rundown, absolutely packed, very busy, lots of excitement, very big change in mood. Last year was still a little bit more subdued, although when we look back, it's been an incredible year. And things have been off to the races. As any of you who are in the space know, things are looking very bright. And of course, there's all sorts of opinions regarding where it goes from here. But the overall general consensus is those that have been in it for many, many years, who've been funding for 3-4 years, projects have taken some money. They're going to take some wins, as they should. But that doesn't change any of the overall theme or long-term pathway. And that seems to be the general consensus. And one must remember that we're dealing in a very small market. The mining market is quite small. The junior mining market is significant as well, small still. And people have had to endure a lot of harsh, long stretches of no wins and no gains. So that's just part of the market. And the good thing, though, is that although silver, one could argue, is hockey stick level shot up and could come straight back down. I don't think it'll come straight back down, but if say it came back down to 50, that would devastate traders. It would devastate people who are into the physical and that narrative. But for us, that's not our mainstay. Ours is our equities. That's what we like. And any project at 50 silver is incredible. 5,000 gold, even if it pulled back a little bit, we're not alone thinking that 5,000 gold is not unusual, not under the conditions that have been going on for last 20 years, say, and longer, but certainly over the last 8, 9 since I've been around. So we're very comfortable, and we're going to go through a lot of that equity side, because a lot of people get nervous too, because they see, oh my goodness, I've done very well. I remind people that if you're rebalancing your portfolio and that risk portfolio, you always have to think of where else you're going to deploy the money. And so even when people say, I'm going to take some money off the table, well, what are you putting it into? Because if you've got it into a project and they're doing well, they're hitting milestones, and they're not overvalued, which very few mining companies out there you could legitimately argue are overvalued. And we're going to get to that, because most people would think the assumption would be they've shot up. These prices must be already priced into the equities. And my argument is that no, they're not. And there's lots of room to grow. Of course, some juniors have. All equities are not the same, as we all know. And we're very fortunate to have a drill sheet model that keeps us in line. And we can reference continuously to see, is this worth taking some money off the table, or should we keep on piling in? So once again, the biggest thing to focus on right now, not only is the fact that, copper has really been tightening up, but that people are paying attention, not just to precious metals, but to mining in general. It's really starting to clue in that there's a large narrative between the big dreams and just the logistics, the trading partners, everything else, compared to what is real and what reality is. And copper is the big story in regard to that, because we've seen at Grasberg and a couple other mines where there's been protests or shutdowns, or, of course, Grasberg, the horrible incidents 3 months ago. That affects the market in a significant way. And people just kind of think, oh, there'll be a bump in the price, and then we'll just get back to production. No, we have to always remember, especially new people, this sector has been extremely underfunded, unloved, and kind of ignored. That's what makes it especially valuable and especially asymmetric. But when you have supply shifts like that, where at a Grasberg mine, say, for example, that puts a severe dent into the supply and demand out there. Never mind that there was one there before. Pulling in new projects and getting them to mine, that's a lengthy process. We go on about that all the time, but we've seen, really, if we just focus on gold, we've looked at margins are real, but the duration has been discounted. And that's the cleanest way to look at this, is that most producers are generating extremely high operating margins. And a lot of the great companies over the last couple of years, we've seen their all-in sustained costs come down a bit, which is also fantastic, given that there is inflation, there's baked-in inflation out there as well. And there's a lot of people out there as well just talking about gold, saying there has become a disconnect too, that people aren't just buying it now saying this is a hedge against inflation. They're recognizing the bigger themes that we've been talking about for years. But all of these producers, record free cash flows. And most of them, I mean, there's no project valuing 5,000 gold or 4,000 gold. I would be shocked to see too many people modeling 3,000 gold. I mean, you might do it just to think, oh my goodness, look at that. So it's very conservative, and it's good because producers, they know that mining's cyclical. They know that it's hot. They know that there's a macro trend behind it. They understand all that, but they also know that these cyclical cycles can shift very quickly, and they want to be very prudent and conservative. So, is there legs in the overall producer market? Yes, on those great companies that have assets and have growth stories, they're bringing on new mines. Yeah, there's a lot. Are we going to hear a lot more between just VRIC and then moving into PDAC acquisitions? Production increase. Yes, we're going to see that as well. And that just reminds me, just coming out of China in the last month. So for just January, we're not even ended yet. I think they've done $4.5 billion in total of bonds, not equity, bonds for their projects, because they view mining substantially different than in Canada. They look at it as being actual infrastructure, as being critical, as being needed, and they backstop it. They support it. The government backs it and supports it. And the overall narrative for them is fundamentally different than in Canada. Of course, Canadians do offer bonds for big projects, but it is more of an equity play. And the banks largely, and the country largely, don't get behind it. They self-impose the problems that keeps a lot of money away from it. But we're hopefully seeing that shift. We talk about that all the time as well. That shift so that Canada can be competitive. But if you took a look at the type of model that China has put in place, where they don't actually fund the opposition to stopping progress, but they actually look at this as being, we're building infrastructure, we're building the demand, we're building the data centers. We could do that at any time. And the big hope is that we do, because we have stored up value that even if you don't even consider what's in the ground right now at 5,000 gold or 110 silver, we have a pathway to extreme wealth, and hopefully we'll start to see more initiatives from a federal level in order to try to unlock that. Otherwise, capital goes elsewhere. And in this kind of market where people are recognizing that Canada has a firm foothold in mining, if people don't think that they can build a project and materialize anything, if it takes 17 years, or if there isn't a promise that the permitting path is going to be very quick, and that we're going to, hold not only not fund opposition, but shut it down and go on the same type of path, maybe not the same, on steroid of growth that China has, but if we just did even a quarter or half of their intent, that would be massive. And of course, we would love to see that for the country and for Canadians, because your fastest way to wealth right now would be if Canada decided to unlock that and to just behave a portion of how China does, to actually say, this is infrastructure, we are going to do this, we're going to build this out. You could be a part of that. A lot of these stocks, they're penny stocks. A lot, they're not, of course, all valued the same, but determining with the drill sheet, real teams, real money, real assays and continuity, you can very much narrow down those that have a risk profile that you like and that have catalysts that are near term and that are fulfilling the dreams and hopes and the thesis that they have. And that can make sure that you are not into some of the real wishful thinking types of situations. Also, we can look at silver here. It's primary silver mines are very rare. I mean, you've got your First Majestic, your Pan American Silver, your Wheaton Silver, or Wheaton Precious Metals. Those have very obvious pure silver plays to them. But, there's going down further, it becomes less and less and less. Right now, everyone's looking at silver. They want to know who's got what. There's huge names like Vizsla who have done a fantastic job. But there's lots of other ones. There's lots of other great companies we're covering, and we're checking them out, and we're throwing some money at. And, even at 112, that we've mentioned before, makes us a bit nervous for it to go straight up like that. There is a fundamental reason for it, so I'm not discounting that. It's just when you see the trade, that could be worrisome. And when it gaps up, often there can be a gap down. Do I think that long-term silver has issues? No. I'm not one of these ones that, the silver 300 type of crowd. There's lots of clickbait out there, and I know you can have fundamental models that can show that. I just think that there's larger metrics and people at play, and ours is, once again, not solely focused on what that commodity is priced at. Is the long-term chart trending up? If it spikes up, great, but we just want to make sure it's trending up long-term. We would much prefer it if it was a bit smoother, like, the growth that gold has had. But once again, one can argue that it's trying to catch up to gold in a hurry. And, that's the psychology, and that's the mindset part here that we have to kind of massage and deal with. And that's a big part of this too, because people that have been in mining have seen cycles, and they get worried when things go too well, because they're not used to being happy. But most people out there seem to think that it's likely not just 6 months of a run. We should have years. And I would argue very firmly that that is true, that the overall macro theme, whether it's from Davos, the World Economic Forum, where they talked about mining, or it's even our liberal government acknowledging that we need to be part of this, that's a big fundamental change. That social, ideological, and political ideology theme is critical. I know that people say, if you have a good enough mine, you can build it. Well, that is true, depending on how big and how powerful you are. But no, lots of jurisdictions nationalize mines. So you need to make sure that the political will is there. If it is, we know that anyone mid and right of mid would be interested in mining as far on the political spectrum. And it looks like we've got Carney and the Liberals certainly interested in it. We just need to see much more metrics. But it is going that direction. And that's the big mood change. It was just the same as whenever we saw the Democrats in the US say, hey, we accept nuclear. We think it's the future. The Republicans were always on board with it. That's a huge signal. So when you get that political will and that ideological will, that is massive. And I think that should be obvious to most people at this point, because most people, especially in the crazy world of politics today, is they feel like they have to buy the whole package. Like you can't be a right winger or a Republican and also love animals. You go hunting means you have to buy a whole package of weird, strange ideas, which is absurd. But if you can get both sides saying, yes, we agree that we need these things, that is a big macro change, because it insulates you from a left position saying, no, we're not extracting at all, or right saying we'd like to extract. That's a much tougher environment to deal with. And that's softening, and it's getting more to the center. And once again, if you've got intelligent people managing expectations, as well as managing the ESG portion of it, making sure things are done cleanly, effectively, and they're funded properly, this has long legs. And once again, I don't like the spikes up. I want long legs. I don't mind doing things, slow it and patiently and slowing it down. And we get a long run on this. And that's the big hope. And whether you're looking at copper or silver, especially, you're looking at that whole electrification. And once again, whether it's solar or whether it is literally just hooking up the grid, and you're going to do just all gas generators, you still need a lot of copper. And we know that's not true. We know that's never going to happen. So we're sitting in a great formal economic excellent place, and we feel that we're in an excellent place for equities. Will it be a bumpy ride? Of course it is. I mean, right now there's chaos in the world in general. It's why people are paying attention to precious metals. But we shouldn't expect that as well then to translate back into juniors and to producers. And that's where that diligence and the discipline of making sure that the companies that are doing what they say they're going to do are scoring well, are hitting milestones, and building positions in those strong ones instead of chasing a 20% gain here and then, oh my God, it dropped, I better sell. That's the quickest way to lose money. And that's why we developed the drill sheet. And we really want to encourage people to continue, not only to subscribe, we're making this available. This is like an institutional level model that we've built, but we want to make it pretty much general to the general public, so they can consume it and realize that, which is why we've made the price point of the Substack so small, isn't because the value is not there. It's my way of giving back as well, saying this is a chance for young people who thought Bitcoin was going to be a big thing. And it is. It's still 80 or whatever. But that saw that asymmetrical kind of pathway to wealth that exists in mining. They got that model from mining. So once that shift happens and more younger people realize, yes, you're not going to get to the same level because it's technology with all of the crypto type stuff where it can happen really fast. It can still happen very quickly in this market. And it can help people build a good position into something that's real. This is tangible. And we remind people, You still need copper if you want to do any of the Bitcoin or crypto stuff. So you're in a safe hands to pull back the next layer of the onion to invest in that which builds the entire country, whether it's the West, Europe, the US, Canada, China, it doesn't matter where you are. This is a chance for you to be able to get involved and to support projects that are going to, create the world we want to live in. The other big issue, which is fundamental out there, is grades are declining. Costs are rising. The prices are going up, of course, for precious metals and copper, but inflation's rising. A lot of these jobs pay very well as well, guys and gals. If you're interested in being a treasure hunter or be either on foot and in person in a jungle or hanging off a mountain or looking at AI models and engineering, you can do that. And mining provides that. And believe me, we need a lot of talent. Things are moving quickly. So if you're left wondering, I wonder how I can make a future, there's a massive future for you here. So if you want some suggestions too, feel free to reach out to me at andrew@themarketmindset.ca. Happy to point you in the right direction as to how you'd even get started and getting down that path. But it's a fantastic pathway. Because once again, a lot of these mines have decreasing grades, and we need to really be spending dollars right now, looking for assets, looking for key discoveries, and transforming the world. And we know we've got some good ones here. We'd love you to join in with us and jump on in once a week. It doesn't even matter, even if there's only like 10 of you on. We're happy to host that live stream just for those that sign up in the Substack that are members of our community, and we'll walk through it. That's the best way to understand these things, is to chat, ask questions, and discuss some of the stocks out there that we feel strongly about, certainly that we're putting money in. And now's the opportunity. Now's the time. I mean, what other time do mining companies need to see to tell people what they're doing and how they're progressing and to grab market attention? It's right now. And the sooner you get involved, the better. Not only because there's economics and there's finance involved. A lot of companies that are very strong are raising money right now. They put in warrants or half warrants. There's a lot of opportunity. So reach out to us, subscribe, and send me an email if you have any interest. We want to help and drive this market forward and share the wealth. There's going to be a lot of wealth created. We want you to be a part of it. So tune in, and we'll keep you up to date with what's happening. Believe me, my brain is still spinning. The amount of conversations, the amount of meetings, literally from 7 a.m. till late at night with all the events. It's impressive what's happening, and people are excited, and we want you to be excited as well. We'll see you soon, everyone, and we'll talk to you real soon. Don't be shy. We love it when people reach out, and we'll look forward to seeing you next week as well. Maybe sooner. We'll see. Anyways, all the best. We'll talk to you soon. Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalyst move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline. so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear.